Good afternoon, everyone, and Happy New Year. Welcome to Stock Market Today, where we break down all the market action for today's session, Thursday, January 2nd. And here with me to help break down the first trading day of the year is IBD markets writer Ken Shreve. So, Ken, a little bit of a downer day for the market. Stocks are racing some early gains. So, what do you have for us today, and what's your view, the first trading day of the year?
I mean, the Nasdaq was up 1%, looking really good, and then it was just like that. It was down 1%, and then it kind of rallied off lows into the close here. So more volatility to start off 2025, but we'll take a look at three stocks today. The first is Apple. Nice breakout recently, but a pretty sharp 4-day decline for the stock. We'll check out what Apple's up to. Also, buy now, pay later firm Affirm, AFRM, and finally MMYT, MakeMyTrip, an online India-based travel firm.
All right, well, let's start by taking a look at the major indexes, starting with the NASDAQ, Ken. And as you mentioned, erasing some early gains, was up, closing down about 0.2%, and looks like it actually came below that 50-day line intraday, but getting close to this previous low here of December 20th. So what are your thoughts with the current market action here?
Well, for the Nasdaq, it's kind of do or die time. This is just a classic test of the 50-day moving average. I mentioned early on it was a decent open. Looked like 2025 was going to get off to a nice start. There were seemed to be a lot of good setups out there, and the Nasdaq was up right along with the S&P 500, up 1% on an intraday basis, and then a whoosh of selling came, and the Nasdaq undercut its 50-day line. But as you can see, it closed a little bit off lows here. Ended with a modest decline. Looks like we're finally going to get lower volume on the Nasdaq. It looks like it's a close call today. So for the Nasdaq, just a test of the 50-day moving average. It did fall for the fifth straight session. So we'll have to see what the end of the week brings tomorrow.
And let's jump over to the S&P 500 index, because as you mentioned, this one a little bit worse shape than the NASDAQ. It's solidly below this 50-day line. But talk to me about what's going on here, because again, we see this about 5-day losing streak with the S&P 500. So what are your thoughts?
Well, the S&P 500 also rallied close to 1% on an intraday basis, and then it too almost fell 1%, and it closed off lows. Now it did take out that low from a couple of weeks ago, that down session. Yeah, right there. It breached that by just a couple of points. Yep, and but it did close off lows here. So this index is in a little worse shape than the Nasdaq. There was a pretty bad break of the 50-day moving average, sort of a weak weak volume rally attempt back above the 50-day line, and now it's kind of coming below it again, and with some signs of distribution. So this index is a little weaker than the Nasdaq at this point, but I will say late in the session, even though we did get modest declines for the indexes, breadth was slightly positive, at least at last check on both exchanges. So we'll take that.
All right, well, let's take a look then at the Dow then, Ken. And this one closing today down about 0.3%. And again, this one well below that 50-day line and looking like it's a 42,000 level here, maybe a floor of support. But what are your thoughts here?
Yeah, I mean, 42,000 is the key level to hold here. But again, the Dow Jones finished in the bottom half of its range as well. Did close a little bit off low. So, you got the Dow Jones lagging right now along with the S&P 500 and small caps, which we usually look at as well, also below the 50-day moving average. So really the only index that is showing some signs of strength at this point would be the NASDAQ composite. And here's IWM, the small cap ETF. That was a bad break a couple weeks ago, the 50-day moving average, and really not much of an attempt to recover those losses. So we'll see if IWM is eventually going to test its 200-day moving average. I think the risk reward bottom line, Alexis, for investors, we lowered our exposure for the second day in a row on Tuesday. So we're at sort of a 40 to 60% exposure at this point, thinking that the risk is starting to outweigh the reward at least a little bit when it comes to growth stocks. Still seeing a lot of stocks holding above support levels, but seeing plenty more that are either testing their 50-day lines or their 10-week moving averages. So still seeing some decent setups out there, but definitely there seems to be an undercurrent of selling in the market right now.
Right, that's right, Ken. And January seems to be just a volatile month anyway. But let's take a look at the 10-year Treasury yield. This one up about uh, fractionally up today, but we can see from beginning of December it's climbed, and it's now at about just under 4.6%. So what is this telling you about the market?
Yeah, it's up more than 90 basis points, I think, since the mid-September lows around 3.60. So, this 10-year yield has really been stubborn about giving back gains, and it's a potential problem spot for the market. I thought the market actually held in there pretty well today, even though the 10-year yield did reverse slightly higher. The 10-year rising bond yields tends to weigh on small caps the most, but this is still an issue for the market, and in my view, a pretty significant yellow flag at this point, because the longer, the 10-year yield stays elevated up around this 4.5, 4.6 level, I think the more it reinforces the market perception that these rate cuts by the Fed are not going to be that. Not going to see many of them next year. Right now, the market's only expecting one, maybe two. So we'll see how that plays out. But it would be good to see some softness in interest rates, because that would help the market. But the way this 10-year yield has been holding gains, I think that's just sort of a sign of what's to come this year, and that's a much more hawkish Federal Reserve that's paying attention to elevated inflation, and certainly not going to be cutting rates as aggressively as first thought.
All right, Ken. Well, let's jump on over to some stocks then. You mentioned Apple. We're on the daily chart here. Apple down about 2.6% today, in that buy zone, getting closer to that buy point of 237.49 back here in late November, early December. But what are your thoughts with Apple here? Again, it's closed well below this 21-day moving average. So what's your take?
Yeah, so I mean, Apple's an important stock for the market here. It was a pretty good looking breakout when the stock moved above that 237.49 pivot. Did it in with some higher volume gains, but it happened over about a month's time, and then over the past four trading sessions, here Apple is almost down to retesting that last or coming close to retesting that last pivot area of 237.49. So this is an important stock to watch. It's coming close to a test of the 50-day moving average, which is just below that 240 level, happens to correspond to where that last pivot on the chart is at 237.49. So it's coming into an area where it should hold support. But again, we're looking at a lot of very important stocks right now that are close to or are testing their 50-day line. So this is an important one to watch. I do think it's noteworthy that the 50-day moving average is pretty much aligned with the last buy area there, right over 237. So we'll see if support holds. If it doesn't, it's probably not going to be good for the broad market. But we'll see a lot of tests and near tests going on right now.
All right, well, we will keep an eye on that. Let's take a look at Affirm. And this one up today about 2.6%. Ken, what are your thoughts here?
Pretty good day today for Affirm, when a lot of growth stocks again were down 1, 2, 3% below the surface. Affirm is still showing it has the potential to be a stock market leader here. Fundamentals are outstanding. You can see the bottom line and the top line growth has really been strong in recent quarters. It's expected to turn its first annual profit in in fiscal 2026. And this is just a really nice breakout and first test of the 10-week moving average here. So you can see it's on pace for its fourth weekly decline, but it's really hasn't moved much at all this week, and it actually is trading up near its weekly high. So this is a pretty good test going on right now. If you do get a bounce with conviction here, it would put the stock in an alternate buy area. So a lot of price and volume charts look like this right now. Again, I can't stress it enough. Lots of tests on the daily chart of the 50-day line. On the weekly chart, the 10-week line, Affirm is another one, making a good case for support so far, but we'll have to see how the week ends.
All right, let's take a look at MakeMyTrip.com. And Ken, I'll switch back over to the daily here. This one up about 3.5% today, reversing off of this 50-day line. But as you mentioned, lots of stocks out there testing these key levels. So, what are your thoughts here with the action?
Yeah, I mean, just to back to the weekly chart. I mean, this is a stock that has made a tremendous run, and it's done so because of exceptional fundamentals. So this is not a price move that's been by accident. So I'm always a little concerned when I see a stock that breaks out over 30 and quadruples. Right, it went from 30 to 120 over a fairly short amount of time. Yet it is still showing a lot of relative strength in the market because of good growth prospects and, again, just a good record of top line and bottom line growth. It's basically the booking of India, large India based online travel firm. On the daily chart, I think traders might have gotten a buy signal today. Again, with the market still a little wobbly here, this was a little breakout over a trend line, touched its 50-day moving average. Not sure this is a place where you would start a position trade again, just because the stock has made such a huge move. But I am still impressed with the relative strength that Make My Trip is showing. And again, for traders, swing traders, might have got an aggressive entry today, but volume rose quite a bit from where it's been in the past 5 or 6 trading sessions. So, some signs of buying in there today, and stock that's just past the 5% buy zone from that 110.49 pivot. But if you look at that 113.61 high, which to me looks like an alternate entry area, doesn't seem too stretched from that. So, like the look of Make My Trip, cognizant of the big run it's made over the past several months, but still showing good technical action with a relative strength line up near highs.
All right, Ken. Well, thanks so much for your insights today. We'll be back with more market analysis tomorrow morning, starting with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And we'll see you right back here tomorrow after the close.